Welcome back to ITK Solutions, where we are interpreting the markets. This is the Wednesday breakdown for traders. So we're going to try and cut through the noise and examine the kind of core metrics that move the crypto markets. We're talking kind of long-term conviction with short-term risk management and everything in between, I suppose. Best place to start would be with the disclaimer. Don't forget the disclaimer. Not financial advice. Are not your financial advisor. If you're taking financial advice for somebody off the internet, you need to go sit down with a financial advisor and just take a long, hard look at the differences between watching a YouTube video and actually going through your financial circumstances. So we're going to go over to first metric, which is Bitcoin long-term holders realized price. So this metric matters because it shows you when the long-term holders are in profit. Historically, it's kind of a bullish structural signal, but think of it as the last time that coins moved after they were purchased, the average price. Okay, so when the long-term holders are in profit, excuse me, you're looking at a steady floor that's slowly creeping up over time. So in the white you have the Bitcoin price, in the blue you have the realized price. Realized price, long-term realized price, currently $35,772. So you can consider that your floor. If we go into a bearish market pattern for the next year, 2 years, if it comes down to the long-term holders realized price, that is a damn good signal. So we're going to start off with kind of looking at things from a wide lens and then kind of zoom in as we go through the metrics. So next one will be, I have to make sure this is working now today. Short-term holders realized price. And this is kind of, you can see here on the chart, this chart goes back full year to July 2024, all right? When we go below the short-term holders realized price, that becomes an accumulation zone. You can see it very clearly here, August 2024. It rebounds up towards it, goes above it, comes back down below it. But that floor was there set in August, and we creep up above it, we come back down below it. You're into accumulation zones. Excuse me, I should really have like a mute button handy. You can see that you go into an accumulation zone when you go below the short-term holder's realized price. So long-term holder, difference between a long-term holder and a short-term holder. Long-term holder, their coins haven't moved for a period of 155 days. Short-term holders are coins accumulated within the last 155 days, the average price of the coins at that time. Okay, so with the short-term realized price, it fluctuates much more rapidly than the long-term holders. Naturally, current realized short-term realized price 99,491. So if we come down around them levels, you'll start to see a lot more activity around there. The short-term holders tend to be, you get a little bit more panic selling with this metric. The long-term holders seem to have a much more long time frame, a longer outlook on how long they're looking to be in the investment. So when the short-term holders realized price is below, or when the current price is below short-term holders realized price, it's all about short-term confidence in the marketplace. And excuse me, I cannot clear my throat. That's better. Or is it? It's worse. So this is another metric that we look for to try and spot accumulation zones when we go below the short-term holders realized price. We can accumulate through their panic selling and capitulation. We can accumulate them coins and keep going towards all-time highs. Another one that I like to kind of go through is the Bitcoin miner reserve. Current price Bitcoin 108,800. Current miner reserve 1.8 million Bitcoin. Now, people like to talk about, supply crunch. This is one of the metrics that needs to be taken into account when we talk about supply crunch. Okay. 1.8 million in reserve. Now, this isn't, funds that are available for sale immediately, but they're near liquid. So these could be available for sale with the click of a few buttons. Okay, you can see this chart here is by CryptoQuant. CryptoQuant, I think it's cryptoquant.com. Fantastic resource. Everybody should be using it. You don't need the pro version. They offer a lot of metrics like this for free. So the total affiliated miner wallets currently holding about 1.8 million Bitcoin. As price goes up, the reserve seems to drop as miners sell into that increase in price, so that they can keep the lights on, basically. We'll look next at excuse me. What we're seeing here is a bit of a flattening in it since January 2025, and a massive reduction since January 2024. The reason for that massive reduction, obviously, is ETFs were approved early January 2024, and they've taken a lot of the supply out of the market. Um, we're not seeing any kind of large scale dumping or aggressive accumulation either. So while it's flat, we can expect some form of a steady market. When this starts to spike upwards or downwards, we will probably see a corresponding change in price action. So this is the sell pressure, right? The Bitcoin miners sell pressure specifically. I know there's a lot going on here, right? But the thing to note is the blue line, right? The white line is the price of Bitcoin. The blue line is the sell pressure. So when miners are accumulating Bitcoin, selling it directly onto the market, the way this is calculated is the mining outputs of the last 30 days are added together and divided by the average of the mining reserve of the last 30 days. Okay, so basically what we arrive at is a standard selling pressure, and that standard selling pressure should be what is produced or what it takes to keep the lights on, or whatever the specific miner's goals and targets are at that specific time. Now, a sell pressure of 1 on the scale is ideal. Okay, they're not hodling. They're, well, 1 wouldn't be ideal. You'd be looking at around, 0.8, I would hope, 0.2 heading towards, or 20% heading towards mining reserves, 0.8 going on to the market directly, for them to keep their operations going. They have to have some form of reserve, as we saw in the last chart. So the current selling pressure of miners is currently at 0.34. It's never been lower. Okay, so that's something to keep in mind. Miners have never been selling less Bitcoin. But at the same time, and that's open market selling, at the same time, they're not accumulating it either. Their reserves aren't growing. So what's happening? Where's it going? Likelihood is Bitcoin treasury companies, likes of MicroStrategy. Other likelihood is the likes of the ETF, Coinbase might be buying directly from miners in order to charge a premium to the ETF companies like BlackRock and Fidelity. Okay, so it's important to realize mining sell pressure has never been lower ever in the history of Bitcoin. Okay, that takes us to the exchange balances. This again, takes us to it's all relevant. When you isolate one of these metrics and you show it on its own, it doesn't tell you a whole lot. But when you see them all together, I think you can get a feel for where everything is. So, steady decline in on exchange balances in Bitcoin, right? Since February 2024. Okay. So again, around the time the ETFs launched. But how much is it reduced by? It's reduced from 2.8 million to 2.1 million. That's a 25% drop in the space of 18 months, just over 18 months. Well, from February, it is 18 months. So the way I like to look at this is as a percentage of circulating supply. What is the percentage of circulating supply that is on exchanges at the moment? And it's 10.55. Okay, 10.55% of the circulating supply is on exchanges now. In my opinion, ready to be sold. There are people who say, you know, a million of that 2.12, a million of it won't be sold because that's just how then people hold their Bitcoin. They hold it on exchanges. Maybe I'm being naive, okay? I don't think that there's a million Bitcoin on exchanges from people who they must be early adopters, okay? I think their Bitcoin's in self-custody. That's where I think it is. Someone's Bitcoin is on exchanges. I think it's the retail investor, if there are any retail investors left in Bitcoin at this stage. But it's a mystery to me. If you add together the minor reserves of, what do we say, 1.8, and we look at the exchange balances of 2.1, that's 3.9 million. Now, just over 15% of the circulating supply is held between the exchanges and miners. That could crash the market on its own. Okay, so I want to see this circulating supply get down below 10% at current rates. You know, that could happen in the space of the next 6 months with this type of drawdown on exchanges. So let's move on. Altcoin index. So again, when we're looking at, you know, capital allocation and how we're going to position ourselves, you know, for the next 3, 6, 9, 12 months, we have to look at where we are, right? And what the altcoin index, it's called the altcoin season index, but altcoin index does is it tells you whether it's Bitcoin season or it's altcoin season. Now, you could flippity floppity it, and you know, whenever it's Bitcoin season, go into alts, wait for the pump up to alt season. Whenever it's alt season, swap back into Bitcoin, and that would be preferable. However, this index goes back, you know, and it goes back 4 years here. Some of the altcoin returns, you've really needed to be in the right assets to gain the type of returns that would turn you away from Bitcoin, and not just turn you away from it, but make you sell it in order to get into altcoins. Now we're in Bitcoin season, and you know, it's shown here March 2025 or 2024, November 2024. That was, you know, that must have been the election spike when things just went wild. I wouldn't have been selling my Bitcoin going into that, you know. So we're at a score of 24 at the moment. 25 is Bitcoin season. Between 25 and 75 is neutral. So we're very close to neutral. And 75 plus is alt season. Okay. So we're at 24. Accumulate alts, no problem. Sell your Bitcoin for alts, not for me. So zooming in a little bit, we can see the Bitcoin liquidation heat map. And what this is, I mean, look at that range. There's just nothing. There's no activity. That's a 24-hour. Yeah, so it was like 24 hours. In that 24-hour period, it didn't break above. I'd say that's about 109.5, and it didn't break below 108. The yellow lines you can see here on the chart are where the highest value of liquidations is going to occur at this price. So just below 108, there's a massive band of liquidity for liquidation there, for leverage positions, and right on 110 there seems to be as well. Now, these are magnet zones, okay? These zones attract price, particularly when you're leverage trading. You open up a sizable 100x position, you'll be hunted immediately. But what people are doing is they seem to be putting a very, very tight range on it here. I don't know which one it goes to first, to be perfectly honest with you. We're at 108,800 at the moment. I think we can see 109.6 today. That'd be outside my comfort level for having a leverage trade in place. I would not like to be getting liquidated on a short up on them levels of 110,000. That does not look like fun to me. So there's clusters that appear around these levels, and these levels get hunted. They get hunted all the time. Right, so we'll move on. Volatility index. So the volatility index measures the rate of volatility or fluctuation of price in over a specific period. Now, current volatility is at 1.27. If you look across the graph going the whole way back to 2011, like it's at one of its lowest levels ever. So why would you why would you not expect volatility to increase? It has to. It's at 1.27. It was at 9 in 2020. Now it is decreasing over time as the asset becomes more and more stable, naturally. And the volatility will, continue. The band of which it tries, or that it acts within, will tighten over time. But to be at 1.27, I'm expecting volatility to go mental soon, sometime soon. But as far as I'm concerned, it's a matter of time. It's an inevitability. I don't think it can go much lower. So last thing, options open interest. So this is provided by Deribit. Kind of show you the long-term levels that we're looking at, long-term levels that that the Deribit traders are expecting, and how much money they're putting behind that. It's substantial. The lowest figure here is the lowest amount that has been put on an open interest position is 3,848, and that's $122,000 by July 25th. That's less than 3 weeks. Not expecting that myself. I think there'll be an increase in volatility. I think there'll be increases across the board on pretty much every metric that we've spoken about, but I'm not expecting that level of volatility. The further out we look, the higher the price goes. September 26th, 2025 is the highest open interest, and that is at $140,000 per Bitcoin. So that's where the kind of experienced options traders think we're going to go. There's been a lot in that. I think I'm kind of dragging it out now, am I? What are we at? 20 minutes. So look, these are the type of things we need to take into account when we're opening positions, when we're, getting into a trade, getting out of a trade. What's the lay of the land? What do we think is going to happen? We want volatility, but we also want to be in a reduced volatility setting in order to open our positions. And we also want to be after, you know, I mean, I particularly personally like to make, you know, small, low leverage plays after we've come out of a low volatility setting. So let's say we're low volatility right now. We drop to the downside, volatility increases, and I'm looking for a support zone. The support zone I'd be looking for there is 99,000. What did we say? The the short term holders realized price was. Wait, sorry. 99,491. So I mean that's the conditions that would push me into opening a low leverage position would be that we increase volatility, mining sell pressure does not increase, we come down to the short-term holders realized price. That's the type of thing I'm looking for. So I hope you enjoyed. Don't have too much to say other than that, other than I suppose thanks for listening. Do you say that? Oh, what is it? Like, subscribe, brush your teeth, drink some water. All right. See you Friday. I think I'm going to start working on a market inefficiency video soon. That'll be a big one. Okay. Thank you.